All right, good morning, everybody. Wall Street Jesus here on the Saturday Sweep Series. I think we're open to everybody today, even though they may not realize it because I made that mistake last week. So got the dates, kind of screwed up. But anyway, we're open to everybody this week. So I'll try to keep some of the lingo a little more broad, a little more understanding to all you guys. But if you have any questions, we'll take questions at the end. Um, anything that's on your mind, just ask away. I wanted to do things a little bit different here, just to keep myself in one direction. When I talk about the markets, especially flow and sentiment, I'm going in 100 different directions. I'll talk about something I saw in one of the sentiment indicators, and then I'll remember something in flow, and I'm bouncing in each and every direction. So this webinar, in my opinion, was something cool I wanted to discuss, something I think we're all interested in, something I like to go over continuously throughout my career. So you guys on private Twitter probably already saw this. I just posted about 10 minutes ago. Little itinerary. All right. So I'm going to try to keep it in this order. If I seem to go off course here, somebody slap me in the head. And this way we can hone in on each and every point here, because I think it's important in this climate. You can't, we discuss this all the time. You can't trade the same way in each and every climate. Okay. In this climate, there could be a real edge that comes out of flow and sentiment, but you have to wait for it. You have to know what to look for. And the most important thing, and we'll talk about this a little more in depth, you have to be ready for it. You have to block out all the noise that's going to be around you at that time. Because trust me, one guarantee I can make you, there will be a ton of noise when some of these signals start to go off. And even though I'm there to remind you, we already experienced a situation like this earlier in the week. Okay. What was the rally? Tuesday. So if you're an intraday trader and you didn't really capitalize on Tuesday, in my opinion, I'm not going to say capitalize enough, but if you know what I'm talking about. If you missed that opportunity, my opinion is you weren't paying attention to the stuff we're going to talk about today. Okay, they were there. It was obvious. I made sure I tried to go out of my way to bring it to your attention a couple of times. But at the time, in the heat of the moment, it's not that easy to react off it. All right. So that's why I wanted to talk about it today before it happens. All right. And you can see some other interesting things on here as well, which you'll find amusing. All right. First off, let me get it out of the way. I always seem to forget it. I rush at the end, and I'm an awful salesman. But two things. You got Lucci's doing a course. He's up for a course again. If you go, here's all the information here. Okay, so I don't confuse you guys. You go to wallstreetjesus.com. If you go to the product section, right here, master course. Okay, I think the date somewhere on here. You'll find it. It says next session. Anyway, it's up in early November. Okay, so for those of you who don't know Lucci's style, he's primarily a tape reader. He likes to read tape. He's not looking at charts. He's strictly tape. Likes to utilize the flow off the tape. So he wants to see what he's looking for on tape first, and then he's looking for flow to confirm that, to build his confidence to stick with the position and so forth. Okay, so a lot different than what I do. And again, there's traders in the room, better traders than I am, that do we're completely different. All right, so there's no one set style. Anybody who tells you that's foolish. It all depends on the characteristics of yourself and your personality and emotions. But so Lucci dives into the tape reading aspect. I get a lot of questions. Well, if I'm this type of trader, is it for me? I don't think you'll know if it's for you unless you're interested in this and you dive into it. You know, if you're interested in learning about tape reading, all right. If you're an active options player, I think it's useful. All right. But it all depends on, your particular style and so forth. All right. But I got a few questions on it. It's early November. You could go to wallstreetjesus.com. They got special promotions the earlier you sign up, etc. Okay. Also, anything we discuss here, if you have any basic questions, okay, from simple, the details behind sweeper activity, which we pay attention to a lot, and all that stuff, you go to the strategy section, quick, easy to read blogs, 1, 2, 3, all your basic questions, how to use this stuff, and all that jazz will be answered there. Okay. And then again, 3-day free trial, no credit card required. So no obligation there. You could get a better feel of what we're looking at on a day-to-day basis. And the private Twitter feed, if you're just interested in that, you click on products, private Twitter, $59.99 a month. You get obviously just a private Twitter feed. All right. So now that's out of the way, because I would have definitely forgot to even touch on that. Let's get to some of the good stuff here. All right. I don't like to comment on rumors like most companies out there. All right. But there's some unconfirmed chat room chatter, unsubstantiated chat room chatter that I'm on the verge of flipping to the dark side and getting short. Okay. That's bogus. That's totally nonsense. All right. And me being bearish is me sitting in cash and waiting for a setup on the long side, whether via day trading or swing trading. Even as a day trader, there'll be days where I sit and do nothing. All right. There's not too many of those because I'm looking to fool around, keep a tight stop, entertain myself. But that's my bearish mode. Okay. Dark Jesus. But, and this is a joke, obviously. I'm not being serious. But what I wanted to touch is because I get the question a lot. Do I ever play the short side, right? Why don't I play the short side? Blah, blah, blah. I just wanted to go over this because I found this interesting, and I think a lot of you guys will find it fascinating. This is, if you look at our schedule here, all right, I'm going to give you a quick look at Armageddon. All right, some of you love these stories. This is back in the 2008 menagerie. All right, you can see here on the chart. Look at that disaster. All right, that's a disaster. So if you zoom the charts out, you look and you're like, wow, what an opportunity on the short side. All right, if you got short, you were aggressive, it was some opportunity. All right. And even myself, I admitted I started to take advantage of the downside during that time. And I'll show you where I started to, where I capitulated in a sense. But for me, primarily, my play on downside was via leverage ETFs. I did play some puts. It was more of lotto puts, small amount of money, try to get lucky. Maybe a bank goes out of business type thing. That's how psychotic it was. All right. But that was the extent of it. What I mean is I wasn't shorting stock. I wasn't building positions in puts. All right. And when you see when I started to look to take advantage of the downside before, and I'm being dead straight with you, I pooped my bloomers and just got into all cash and took all my money out of every brokerage account and every bank I had because I thought the world was over. Okay, that was the point. But a little bit before that, I did look to take advantage of some downside movement because it was easy money. But then it got so scary that people were more worried about the money they had in these accounts than making money. Okay, anybody I knew anyway. All right, so, but here's my example. The reason I don't really look to take advantage, all right, on the downside, unless we get into full-fledged bear markets, is because look how difficult it was even during Armageddon times. All right, watch. So this is where, and I hope you guys can make this out. I want to take some of this stuff off the chart so you can see it. Hold on. All right, because again, everybody makes it sound so easy, playing the downside, right? Everybody. All right. So here we go. Okay. This is basically where we topped out. All right. You see here, there's Niners there too to give you an indication of where things should have been exhausted and not. So you got a dip here. People just thought another normal dip. There was some negative news. If you got short into this at some point, you got squeezed and run over. Okay? Unless you really know what the hell you're doing, willing to take a lot of cuts to catch the bigger move, meaning take a loss, put the position on, next setup, take the loss, put it on again. You know what I mean? Committed to the trade. And if you talk to most people who have any success on the short side, swinging short positions, that's what they do. That's what they do. They take a million cuts. They take a small loss, and then eventually, maybe the fifth setup, they catch that big whoosh to the downside. So for me, that's not for me, you know? And to be honest, that's not for a lot of you people out there either. But that's your decision to make. Okay, so here's an example. Here's the first pull, right? Then you get a rally, double top, blah, blah, blah. Second pull. This may not look like much on the chart. That's another squeeze that if you're short, what do you think? You're just going to sit through that? No pain? That's nothing? Okay, look at Tuesday's move alone. That was one day earlier this week. Right? Think of that, Tuesday. Then, just when you think maybe shorts are giving up, right? Another leg down here. Okay? Finally bottoms out again, and you get some squeezes, and again, you're just not that big move down. All in all, net, the market's starting to trend lower, though, right? The market's starting to trend lower. So, you know, people get the wrong impression. Like when you're in the process of this leg lower, in the middle of this, and you're being active trading puts, like a lot of you guys do in the room, intraday or flipping the. Of course, there's nothing wrong with that. The problem with that for me and a lot of traders out there is that if it's not 2008, which again, I'm giving you the worst case scenario here. So keep that in mind. This is the worst freaking case scenario. This is not likely. This is the worst case scenario. All right. So if you think you can be disciplined enough to flip from bearish to bullish, and then that one time of Armageddon, be committed to the short side and make money, if you think you're that good, more to you. All right. So then again, we finally bottom out here just when it looked like it was at its worst. And this looks like a bottom, right? This looks like a bottom. Like right now, this looks like a bottom. Are you going to sit short through that? All right. Keep fast forwarding. I love doing this. And look at this. Whoop. Another one. Okay. And if you look at these charts, it's right when the shorts probably gave up. That's it. You know, this market's back. The subprime nonsense. So small. It's not a big deal. Blah, blah, blah. Another new low. And here's where shit starts to hit the fan here. Okay. Now, this right here is where the easy money was made on the short side. See this? Where the floor just completely gave out? That's where, you know, that's where there was no liquidity. The credit markets just completely froze, locked up. That was Armageddon right there. So for me, I'm being honest with you guys. I can lie to you and tell you, oh yeah, I caught that whole down. The only time I took advantage of any downside was this period here. This period here. And the rest of it here, like I told you guys, I was more worried about my money in the account. I was worried that brokerage firms weren't going to be open the next day. And even though I'm in short for my money, I got to get in line with thousands of people, millions of people to get my money back. Who the hell wants to be bothered with that? We're trying to make some profits on the downside. That was our mentality. All right. That's how big of a debacle it was back then. So that's the worst case scenario. And then after this waterfall, this is where we finally bottomed. That was it. Okay, this is where we finally bottomed. But you see how, look, if you scroll back, look how fast, look how much and how fast this happened. That's the whole move, right? Look at this. The floor just gave out. Whoop. And then, what the hell is that? And then obviously, you guys know what happened. One of the biggest and best bull markets of our lifetime. All right. So I just wanted to give you guys a picture of what could be the worst case scenario of this pullback here. And it's not likely that. All right. And even if it is, we're not here, right? The likelihood is we're somewhere up here. And in my opinion, waiting for the long setup or just being nimble. I'm not saying you not to play the downside at all. That's foolish. If you're, successful doing that, if you're comfortable doing that, intraday on a short-term basis, of course, the momentum is to the downside when you're in this type of phase. But if you think you could just go all in, build some short positions and, make a ton of money, it's not as easy as it obviously looks initially. Okay. So that's why for my personality, I've stayed away from getting all in, all wrapped up on playing the downside. Okay. More importantly, because if you go back and look at any other pullback, people thought it was the start of Armageddon, and what happened? They missed one of the best long setups. They missed 2008 on the long side over and over and over again. So one Armageddon, and how many opportunities on the long side that people thought was the start of Armageddon that just was the start of a whole new leg higher, right? Oh no, here, Armageddon, whoop. Oh no, 2008 Armageddon again, whoop. You know what I mean? So that's why I try, and I know mostly how I am. It's easier said than done. It's not easy to get all bared up, have all bearish exposure betting on downside and then flipping when you start to see signals of the opposite happening. I give you guys the example of 2016. Okay, this is what 2016 looks like. That we call the Bazooka Joe lows. You guys probably hear us talk about. All right, because people thought that was on the verge of becoming a major disaster. And, we call it the Bazooka Joe lows because of the buying that came in or into extreme bearish sentiment, and so many people ignored it. Not only did they not flip from short to long, they stood short. They wanted to be committed to the downside move. This market has rallied from 2009, the lows, all the way to 2016. We're due for Armageddon. That was the psychology back then. All right, this is it right here. Looks pretty vicious, right? Looks pretty vicious. And literally, not this one, this retest of the lows right here, that's where the action came in, right into extreme bearish sentiment, buying out of nowhere. The flow was awful prior to that, awful. And then this is what happened. Okay. So again, there were a lot of decent people in the room, a lot of good traders in the room who were making a lot of money on the short side, they're not here anymore. Do I need to tell you why? They're not here anymore. Why? Because they caught this move on the downside, but they got so wrapped up, right? They wanted so badly to catch the big one, the next 2008, and it didn't happen. The total opposite happened. All right, so I just wanted to give you guys, again, an example. I get the question a lot of why I don't like to short. I don't like to get involved emotionally in these things and that sort of thing. All right, so hold on a second here. Let me get this now. So let's go back to now. Where are we here? Hold on one second. Yes. Okay. Thank you. All right. So let's get to. I get football games all day long here. All right. So we got that. Now I want to share with you guys. All right. The most important things to keep an eye on right now in this climate, regardless, okay? Whether this market has another leg lower, whether we already saw the lows are in, okay? But there's a lot of mess out there, especially now we're in earnings season, right? We're in earnings season, the flow is messy, there's no quality, there's back and forth, put buying, call buying. You got to try not to pay attention to all of that and just zone in on some key things until we finally get out of this climate. Okay. And we may be in this climate. Who knows? We could be in a corrective phase to the end of the year. Okay. But there's still going to be vicious rallies in between. All right. And you can see here what I put here. In my opinion, knowing where the squeeze is, whether you're playing the downside or looking for that long setup, knowing where that high probability squeeze may show up, I think is what your goal should be. All right, so if you're looking, let's say you're in cash, you're looking for a long setup, you want to really start paying attention and start looking for entries when that opportunity, that high probability squeeze may be around the corner. If you're short, what do you want to do, right? You don't want to be anywhere near that. So you want to be really careful and be ready to cover, or in my opinion, take off risk on a short position if we're, lining up closer to a high probability squeeze. So that's what basically the signals, what I'm about to share with you. And a lot of you guys know this already who have been in the room. But I know this and I like to go over it constantly because it's a refresher and wakes us up to not ignore these key signals. All right. These are the signals here. All right. We'll start with day trading and then we'll go to swing trading, which in a corrective phase, swing trading is going to be a hell of a lot more difficult. All right. We all know that, right? If you are a swing trader, you had a great run. Okay, you can't be too discouraged if this market goes into, a little bit of a lengthy corrective phase, and it may not, but at some point it will. Okay, you have to expect that. I mean, 2017 was ridiculous, right? And, prior to that, every dip was a tremendous buying opportunity. So now, at some point, swing trading is expected to be a lot harder, a lot more difficult. But if you can be tactical, if you can day trade, even if worst case scenario, you got a flip trade, looking for that squeeze and selling into that, not looking for that follow through. That's where most traders find success. You guys hear it. It's a day trader's market right now. All right. So again, this is stuff I use, and then you take this stuff and try to apply it to the way you guys trade. All right. So for day trading, let's use even Friday as an example. All right. The stuff out of flow we want to see on the day trading end, what I look for. Let me pull up a regular a regular SPY. How do I? Oh, here, hold on. All right. So this is a 5-minute. All right. So take, for example, Friday. All right. And those of you on private Twitter in the room, you saw I wrote up a little post after the market on Friday talking about this a little bit. I think this week was a good example of what we're going to review today. Okay. Because think about this. We had Tuesday. Okay. We had a really nice setup, a perfect setup, in my opinion, off sentiment. Perfect. Short-term indicators, green signal, all of them, and intermediate term indicators, a lot of them set up. All right. So a picture perfect setup off of sentiment going into that Thursday rally. Okay. We got a little gap up. If we got weakness, honestly, I probably would have had the best day of the year myself. But we had a little bit of a gap up. So for me, I'm not looking to be as aggressive, at least initially, into green until I'm really seeing things confirming, on the flow side, on the sweeper side. Okay. So compare Friday to Tuesday, the Tuesday rally, and I'll show you the differences. Tuesday, we had a gap up, again, off nice sentiment signal and sweeper activity right from the opening, ding, 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 ding. They went bananas. Call sweepers were throwing themselves at any exposure they can get into green, but the pace of the call activity, and what I mean by pace, you'll see it. If you're on private Twitter, you see more and more alerts, and they're all call sweepers. Okay. If you're in the room, you're seeing the board and obviously my commentary, but light up all green, right? All green. You're seeing a lot of high beta names, a lot of market moving stuff catch the action. All right. Not some unusual activity in IRDM, right? Where market makers are going to hedge. That's not going to have any influence on price action. Apple, Facebook, maybe some Dow names, Caterpillar, Boeing, that sort of stuff. ETFs as well. But you want to see individual names included. Okay? You want to see individual names included. But if they want to attack the ETFs with that, the more the merrier. Okay? So that was Tuesday. And what happened? Market gapped up a bit, sort of like flatline, chopping around as sweeper activity continued to pour in and then took off. And never stopped, if you remember, till like maybe 3 o'clock in the afternoon that day. I think the Dow, that was plus 500-600 on the Dow, right? All right. So that was a perfect setup off flow and sentiment. The only thing that was missing out of that was what I mentioned earlier. If that was a flat open or a red to green open, oh my God. Oh my God. Okay. And that can happen, obviously. All right. But that was the only thing missing off the Tuesday squeeze. All right. Yesterday, we saw the complete opposite. Anybody who was paying attention to the action, reading the commentary, listen to the commentary. A lot of us were talking about it in real time as it was happening. We get a gap up. Okay. Sentiment wasn't there yet, but close enough to pay attention, right? We didn't have the squeezometer there. We didn't have the equity put the call and the short-term trading sentiment there yet. It was close. The total put the call was close enough to pay attention. So let's put a check mark next to sentiment. Okay. But the main difference was the sweeper activity. The market starts to rally here. Now, for me, like if I'm not paying attention to the activity, the sweeper activity, what's the difference between yesterday's move and Tuesday's for me. For me, it's nothing. Like, why wouldn't I buy into this, but buy into Tuesdays if I wasn't looking at sweeper activity? To me, there was no difference. The major difference for me was, instead of them coming in aggressively sweeping up calls and throwing themselves for long exposure, we start to see Home Depot puts, right? Caterpillar puts. Right? You guys know what I'm talking about. Roku put sweepers? Wait. Roku put sweepers? That's not what we want to see, right? You understand what I'm saying? Right. Then to top it all off, like, if you weren't convinced there, okay, and I was going to go into that, and I see MJ already talking about it because she knows, one of the key signs to look for too within the sweeper activity are VXX, UVXY put sweepers. When they're aggressively buying puts, they're anticipating a squeeze. They're anticipating the VIX to roll over. All right, so if you're looking for a bullish setup, you want to see them get aggressive on the put side, right? We saw some put buying. That was another thing we saw Tuesday. It wasn't really aggressive, but we saw some put buying. What did we see on Friday? Somebody leans into UVXY calls on Friday, right? That was about, I think, 10 o'clock or something, 10:30 tops. So, and a sweep, okay? So the complete opposite. That's what I'm telling you, the complete opposite. Here is the UVXY, guys. So, yeah, it was a sweep. Hang on. It's got to be right around 10 something. I know for a fact. 10. Where is she? Right. Here it is. See it? You guys saw it. Most of you guys saw it. All right. And, a lot of us were talking about it at the time. Just wasn't something, that's not what we want to see. But that's the importance of, to me, the sweeper activity. Now, you could see here, right? There's some call buying. There's some call buying in between. Like a Mattel sweeper that's reporting early next week. But that's, you can't, again, if you're looking at the individual flow name by name, right? A lot of people do that. Some people who've never been in the room, they come in, they say, oh man, a sweep of Mattel, that means maybe I should buy it. Instead of looking at the whole picture there, right? A small Mattel call sweeper sandwiched in between SPY put sweeper, Caterpillar put sweeper, and a UVXY, the biggest bet of the morning, on the call side. So this past week was, again, a blueprint example of what, because sometimes it's not easy to understand when I'm writing those post-market posts if you haven't been a member for a while, or you hear me talking about it on Twitter. But that's exactly what I mean when I stress to you guys, now more than ever, keep an eye on sweeper activity, the pace of the activity, and what they're buying. Because what I'm trying to point out to you guys is that sentiment is set up enough that if they like the match, if there's some aggressive buying to come in, we can see a very profitable squeeze. All right, but that's why it's so important to pay attention and see if they come in buying. If they're not buying, especially into a little gap up, and we start to see put action, that's not a good sign. All right, and for me, I know it may bother some of you, but for me, if action like Friday comes in and the market happens to rally some from that point, it doesn't bother me, because that's not what I'm trying to catch here. You know what I mean? The market goes up and down every single day. The whole point is, when my signals, right, when our signals line up, those are the spots we want to take advantage of. And I mean that for each and every one of you who look at different things. You may look at technicals and see an important, line of support. And that's where sweepers get aggressive. Or resistance, and that's where you see action like we saw Friday morning, and maybe, that's a caution sign to you. But those are the key components out of the action, all right? And the problem is it's very short-term based, all right? It's not telling us anything basically for early next week. This action we saw Friday, all right, as much as I'm stressing the importance to you guys for Friday, next week, don't even remember it. It's useless. Because they can come in Monday, Tuesday morning, like they did this past week on Tuesday, and they can go bananas on the call side. And we can see a huge squeeze. Huge. Okay, so we went from nothing Friday, where the action leaned bearish, to all of a sudden, snap of a finger, a huge squeeze early next week if we see them explode. All right, and the reason why I say that, all right, and I'm not even talking about quality action here, guys. I'm talking about the pace of the action. I don't care if they're $30,000, $40,000 Apple sweepers. If there are 15 of them, right? If they're 15 algo Apple sweeps, I don't care. That's going to get the job done today. May not, make a dent over the next couple of weeks, but for today, it's going to get shorts covering. And that's why it's important, especially in this environment where the squeezes are vicious and extremely profitable because there's a lot of people shorting out there. There's a lot of volatility out there. All right. And this leads to basically the other side. Okay. As far as looking at sentiment as a day trader, both intraday and end of the day. Okay. So if whoever's a member out there, you guys know we're looking at the squeezometer. I'm posting this stuff both on private Twitter in the room, right, with some commentary. Like here, for example, NASDAQ put the call still hasn't budged since I posted it earlier in the day. In other words, I'm telling you, there's no panic. There's no bearishness out there. There's nothing to get excited about. All right, so those are the intraday signals. But at the end of the day, getting set up for that next morning and being ready to pay attention to the sweeper activity, what we want to see, okay, is stuff like this. All right, this is the end of the day stuff. Now, for a short-term basis, a picture perfect scenario like Tuesday, I would have listed here bullish, bullish, bullish. We're not quite there yet. This is what we were talking about in the room Friday. We're not quite there. We're really close. And you can see here, a lot of other stuff is there. A lot of other stuff. Intermediate term stuff. So in my opinion, it's still worth paying attention to the activity out there. Right? You see sweepers, you see them attacking. Don't say, well, this is not green. It's really close, but not green, so I'm not going to participate. If we see sweeper activity really starting to get aggressive, we want to go bananas. Okay? Because this is telling us here, not only, the short-term signal was there Tuesday and we're close, but because of all the bearishness around us, that even some of this stuff that we see at major market bottoms are starting to line up. Okay? Some of the stuff you don't see unless you're in a correction. We don't look at some of this stuff unless we're in a correction. Is there. Waiting and ready. All right? The sweepers are just going to help out on the timing. All right. So this is basically the shorter term stuff here, right? And then, you guys know the rest of it. All right. Total put the call that has been elevated Equity put the call. We put a lot more weight in. Not panic, but elevated. Panic, in other words, would be a 1 or above, but it's pretty high. All right. So again, we don't need a major market bottom here to catch a squeeze like Tuesday. It could just be a squeeze. So we don't necessarily need panic. All right. But the likelihood is we're going to get a spike above 1 when this is all said and done. There may be 10 squeezes before that. All right. This is all intraday stuff. Tweeps. Right, we want that there. That's sort of neutral right now. That can get there Monday morning, Monday. The fear greed model, you guys know that. A lot of you guys look at that out there. Bullish. Okay, was just bearish into the highs. And it doesn't really move around that much. Bullish. Flight to liquidity. This is something we're all going through right now. We're all complaining about it. This is how much of a travesty it is right now to trade individual names. Okay? They're not making sense. There is nonstop selling in some key sectors and spots out there. People are starting to throw in the towel on a lot of individual names. That's what this is telling us. What they're doing is any long exposure, right? I have to be long. They're buying SPY. All right. And when that gets to an extreme, like everything else, is usually around bottoms. All right. So that's there. Degenerate ETF buying. You guys saw it going into Monday, I think it was, going into Monday. That hit levels we haven't seen for years. Years. Higher than Feb, the panic attack. That's the leveraged inverse ETF buying. Okay? So that was, going into two. Now, still at elevated levels off the highs of Tuesday. Maybe we see a spike in that, some selling early next week. Right back, if not higher than where it was. Equity hedging. Again, you don't see extreme readings in that unless you're at bottoms in corrections. You don't see this in bull markets, I'll tell you that much. That's at an extreme. The daily sentiment index. I got a lot of feedback from you guys that you like the indicator. The reason why you lose interest in it, you don't get enough signals. Because it's more of based on positions. A lot of people look at this stuff. A lot of pros, the DSI, the NDSI. Okay. They're at levels, again, I don't know. I don't even know if we were this low in February. I got to be honest with you. I don't think we were. But anyway, we're there again. Retail put buying. That's pretty much would have a bullish signal. I think we're already on a bullish signal. So call it a bullish signal. Sentiment traders dumb money indicator, bullish. Smart money hasn't been anywhere near a buy signal in ages, is really close. The Nova Ursa, I like it a lot. That's there. I got some of these here. I'll show you guys. Hold on. Not all of them, but some of them. You guys know this one. Okay. Go from all-time lows, all-time highs, and you're back down into net short territory again. This was stuck up here, felt like forever, right? I stopped posting it. There was no reason to post it anymore. All right, we know, people are a little too bullish in NASDAQ and tech, but when are we going to get a bullish signal out of this for us? It's finally there. Here's some of the Nova Ursa real-time short-term stuff. Okay, you see, I keep doing it, it's going to cover it. But you see the major moves to the downside in that indicator, and that red is a moving average. And a lot of people look at the rate of change there and stuff. That's as low as back in February right now. You know what else is an indicator that never doesn't flash enough signals and is almost there. You guys remember I was talking about it in February on the bottom there, AIM. You guys remember that? Ani, if you're out there, you know what I'm talking about. AIM. What's it again? The advisor investor model. That's really, really close. Really close. All right. This one on the bottom, all the way on the bottom, 28. So that, that could be there early next week. The moral of the whole story here, guys, is, when you see this stuff in this type of environment, in this type of climate, when you see this stuff start to look like this, the last thing on the timing aspect, okay, if you're a intraday trader, a very tactical short-term trader, sweeper activity is God. Just again, the pace of it, the buying. Doesn't have to be good-looking orders, doesn't have to be bull missiles. If it is, even better, because it may lead to, a legitimate bottom. But for a squeeze, you just want them to light the match. Why? Because they're telling us everybody is leaning. Everybody's leaning. All right. So anybody have any questions on any of this stuff on the day trade side? We'll start to talk on the swing trade side and what makes that a little more difficult. But does anybody have any questions on what we just went over as far as what to keep an eye on as far as day trading? Niner, we'll get into that. Niner is a whole different story, Mike. We're using in addition to this, I'll touch on it quick, all right, because it's pretty easy. But so, like I said, day trading, for day trading, what I'm looking at, all right, the way I like to day trade, when a market is in sell mode, okay, and we go to new lows, if I see a niner there, meaning it's a sign where sellers may get exhausted. For me, if I see an uptick in call activity around that niner, I'm going to get in for a little trade. Okay, so I want to see at least some buying there. If you remember, I don't know if you remember or not, but Friday, and it actually lined up with it, we got the niner. The only buying, the little bit of buying we did see was late in the day. There's usually some action at the late, into the last hour anyway. But that's the only time we saw a little bit of buying. Okay, so again, here tells the whole story. Watch, and you'll see what I'm talking about. See that stretch of green? All right, so we got a niner, which is telling me that sellers might be tired here. That's all it's telling me. They might be tired here. Okay. And if I see some buying come in and I feel that there could be a change in momentum where I can catch a bounce, that's where I'm looking to play along. All right. So they just fit in well with, what a lot of us are looking at. Okay, we're not chasing rallies. We're looking for weakness, and that's an indication of where they may get tired, and we're looking for buying to come in. At least I am. I'm not playing any Niners without any call flow around it. All right, but that's me. So, and this is what happened Friday. You can see here, right? Let me know when you see things start to change. Green, beautiful. Oh boy. Right? And as soon as the buying dries out in this type of market, this is what happens. It happens fast. It happens fast. Look, boop, boop. This is a 5-minute chart. All right. So you can see here. That's where the put action starts to come in and, into the bell. A little more drastic on a 1 minute. You can see it better. They flushed them right here. All right. But again, this is intraday stuff. Guys, if you can trade intraday, these are all tools that could be helpful. And just so you get an idea of risk management, all right? I don't know, some of you play ES, Some of you play calls. I know Brown, I see you out there. You like to take shots on the cheap premium calls, right? And basically zero, I guess, would be your stop loss. So if you're making a play on this intraday strategy, okay, what you want to do is you want to be a buyer around these levels, and you're looking for a stop underneath that, right? At some point underneath that, whatever you're willing to risk and what you think you're going to see to the upside on a risk reward basis. But you can't just, oh, I'm going to buy this 9 and I'm going to use ES and I'm just going to write it down for the hell of it the rest of the day. You can't do that. You know, the beauty of day trading is your downside is you got to limit that. That's why you day trade. You know, that's why you day trade. So if you're looking for an entry there, you see some flow, you don't catch as big as a move, it's going to happen. Sometimes you catch a rally, sometimes you don't. Sometimes you're going to get stopped out. The name of the game is to win more than you lose. For me, with the addition of sweeper activity, and at times when sentiment lines up, I feel that the odds are I'm going to win more than I lose. But that's the goal here. All right, and the same thing, Mike, on the other side. A red 9er would be where buyers, you may see them get tired. So here you had to rally. This worked well with the flow. I didn't play it because I wasn't looking to play the downside there. But this worked well with the flow because you had a rally here, and then all of a sudden we start seeing them, you know, sweeping Home Depot, Caterpillar, Roku puts, UVXY, Kohl's, and you had that 9er, and this was a big move. You know, this was a big move. The equity put to call, good question. Deep is asking, what's the level on the equity put to call that you want to keep a level on, keep an eye on? And here's what I want to tell you. If we're in a bull market deep like we have been, okay, right? You know, just a bullish trend, higher lows, all that jazz, anything but a correction. Any level 0.7 and above, in my opinion, you're looking for something long. Okay? I know a lot of players that I've worked with that if they see 0.65 or above in bullish phases, they're looking to get long the market. Okay? But in corrections, you know, usually above a 1 is the sign of panic. Okay, but you can see here like 0.8, that's elevated in my opinion. Okay, that's elevated. It's not panic, but they can catch put buyers here if they want to. So it's worth paying attention to. You understand? Panic is a 1 or greater. Extreme, I would say 0.75 or greater, if that makes sense. All right. But like I said, if you were a buyer on any 0.75 throughout this whole rally, you would have made money. You know, but you know, I mean, listen, good times, they don't last forever. You know, I'm already expecting things to get more difficult. I mean, we don't have to be you know, what's his face? A market connoisseur to know that things could get rocky from here, more volatility at the least. So I'm already getting myself in that mode. You know what I'm saying? I'm already getting myself in that mode. But at the same time, I'm not going to scare myself out of signals I know that have worked even through corrective phases. Okay? Can bearish sentiment linger for a long sustained period of time, okay, without a rally? I just showed you an example of when it did. but that's the exception. That's not the norm. Okay, that's not the norm. I mean, you take examples, 2011. I remember it like it was yesterday. 2011, we had a pretty vicious correction, quick one. All right. That was the government shutdown, if I'm not mistaken. And I remember sentiment, a lot of the sentiment stuff I got here, all lit up green. All of it. All of this was green. And there was still a little more downside left. Okay. But the rally that followed from there, the squeeze that followed from there was ginormous. You know, it was ginormous. All right. So I just, again, you know, I don't want to give the impression that just because you see these things light up green, that each and every time that the selling is going to stop like a clock. Now, if that was the case, I wouldn't even pay attention to the sweeper activity. Sweepers are my heads up on the timing of that, if that makes sense. Right? When the pros are starting to get aggressive, that's my indication that maybe, you know, now is the time this tide turns. Where they flush, where they rip all these put buyers, all these shorties. So that, you know, that's why it's important. All right. What other? I forgot the other questions here. With so much money now in ETFs than there was in 2008, do you believe that when Armageddon does happen, Vince? All I know is there's likely going to be another Armageddon type scenario, but who the hell knows when? Did you guys saw that movie with what's his face? Is it The Big Short that played American Psycho? You know who I'm talking about. The guy who played American Psycho in Batman. He's The Big Short. Is that the movie? Ryan Gosling, is that his name? Yeah. All right, so if you guys didn't see that movie, go see it. All right. He plays the guy who, in the 2008 Armageddon, saw the credit crisis, the housing crisis, right in front of his eyes. A smart dude, Christian Bale. That's it, Christian Bale. Okay. A very intelligent dude, a little cuckoo, right? He was nuts, but those are usually the guys who figure this stuff out. And the point of the story here, what I'm trying to tell you, look what he had to deal with to be right off that move. Look what he had to deal with to cash his chips off being right. None of us can do that. Okay, so the point of the story is, don't worry about Armageddon. You can't focus on Armageddon. There's one Armageddon event in a generation, and your speculative options account will be the least of your worries if we enter Armageddon phase. I promise you, the least of your worries. You won't be the only one losing money. Put it that way. There'll be a lot bigger and worse losses out there. All right, so I'm not saying don't play cautious. You play cautious. You want to be prudent, right? If we're in a corrective phase, if we're in a bear market phase, but to plan for Armageddon is you're taking your money out of your account and you're building a bunker. Okay, that's Armageddon. You're right. People flock to gold. You guys don't understand. In 2008, I know people, they were having gold bars delivered to them. Physical gold bars. I'm like, what are you going to do? What are you doing with that? You know, oh, well, if the dollar, blows up, at least they got something of value. I'm like, is this seriously going on right now? This is really happening? People are stashing gold bars under their mattresses? That's Armageddon. You know? So you're not worrying about the spy calls you bought that are underwater. You know what I mean? Right? So here you want to take it nice and easy. You know what I mean? You position nice and easy. You're looking for signals, and we'll go right into swing trading here as well. You're looking for signals to line up. Now, here's where swing trading becomes difficult. Okay. Let's take this scenario right here. I think this is a perfect example. You don't have the shorter term stuff where you would like it, right? So you're looking for a little more weakness or a little more bearishness out of the market, a little bit more, okay? Flow has been abysmal. There's no indication out of flow that this thing's going to turn here. All right, we already talked about that for day trading. Forget about swing trading. So what do you do now? What do you do? Okay, I mean, the way I would approach it is, if you see weakness, let's say from here, early next week, you see some selling, and you start to see the equity put to call and stuff like that starting to climb higher into that selling, you have to at least start to look to get long there. If you don't, then you may miss a piece of the squeeze, okay? And then you're relying on that follow through from that point, right? That's what it comes down to. So a lot of people that I know, what they do is, let's say again, this setup. Monday, market starts selling. You can feel the uneasiness, right? We feel it in ourselves. You see people shorting, you see people slapping 5, they're making money on the puts, blah, 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 blah. You have to find it in you to buy something as a swing trader. Okay, why? Because this is telling us that if the market wants to continue lower in a big way, they have to pay all these guys on the downside. All these guys, inputs, super bearish, are going to get paid. So now think about that. It's hard enough, like I said, day trading, I see people ignore signals all the time. There's weakness. Nobody wants to buy thinking squeeze is coming, even with call sweepers. As a swing trader, it's even harder at times. But that's what you have to look at. Because again, remember, did you see that 2016 example I showed you guys? Where Bazooka Joe came in? He didn't come in off a rally. He came in right when the market was rolling over into new lows. Again, because it was such a beautiful setup, I remember it like it just happened. Nobody wanted to believe that could be a bottom. No way. No way. I don't care, Bazooka Joe. I'm not even covering my shorts. That's the lingo that was going around then. Okay. So you gotta understand, when you're looking as a swing trader, okay, when you're looking to take advantage of these type of markets, okay, you have to expect to be early. You have to expect to be a little early. If you're not, you got lucky. But I'll tell you this, you don't need to nail the bottom to the dollar to make money. You don't need to nail the tick to make money as a swing trader. So in other words, whatever it is you do, you buy SPY calls, right? You're looking for a half decent move, you go out a couple months. You're looking for the quick squeeze, you're going out a month. Maybe you want to piece in little by little throughout the day. You don't want to go all in at one spot. Or maybe you're fortunate enough that the sweeper activity happens to come in, and give you a heads up. That's what you would be looking for. But again, here's the example. Okay, I can paint roses to you, but it doesn't always line up like that. Look at Tuesday. Tuesday, sentiment was all there. Flow was awful. And then Tuesday morning into a little bit of a gap up. That's when the flow exploded. So you had to chase there. And the move came all in one day, right? So think about that. If you chased green at the end of the day, hoping for a follow through, what happened? So that's the predicament you're in. All right. But if you're looking bigger picture, which most of you are out there who are looking to swing trade, otherwise it's not worth it, in my opinion. You're better off day trading if you're looking to be quick. The moves are big enough. If you're swing trading, you want to catch a decent move here, a half decent move, a sustained move over the course of weeks. And I think into any weakness from here, you have to at least be ready. You have to be ready because we're close enough. And here's another point I wanted to make. Like, what's going to happen if this market's down Monday? Okay. The squeezometer, you got that signal you wanted. Short-term trader sentiment, you're going to have that signal you wanted. This, you're going to have that signal you wanted. So you're going to get all the signals that you were waiting for anyway off one little day of weakness. So you have to be ready. You have to be ready to at least start looking, to start buying there. You know what I mean? And that's the problem with swing trading in this environment. If for example, if these are all not lined up, all right, we look at these top three here because that's the shorter term stuff. All right. If you don't have these lined up, in other words, they're not bearish enough, as a swing trader, you may not get that follow through. Again, Tuesday example where it was a big rally, but if, you know what I mean? If you played, let's say, something shorter term, you didn't get any follow through there. That's it. Now, in my opinion, you shouldn't look at it that way anyway. You should look at, the size of the rally, not the time, because things move around that much more quicker in this type of climate. But you get the point I'm trying to make. All right. But here, in my opinion, any further weakness, especially if you're short, you're going to be really careful. You're going to be really careful there. I haven't seen a lot of these line up in a long, long time. Long, long time. I think the only thing that's missing right now are the shorter term indicators, and they got there, don't forget, they got there Monday. But because of the squeeze, we lost some of it. Because of that big squeeze Tuesday. They were there Monday. All of them. So just keep that in mind. Again, keep that in mind. And if we see sweeper activity, Katie bar the door. Then we have no problem. We know what to do, right? If we have the luxury of weakness and we see them start buying aggressively into that weakness, that's easy peasy, right? We don't have to figure anything out, but it doesn't always line up like that. It doesn't always line up like that. Vince is saying, I don't know anyone can be long in this market. So many potential black swans out there. Yeah, Vince, I get it. Nobody's long. Yeah. Nobody, you're right. Nobody's long here. But does the market work that way? The last time I heard that, Vince? Before the election. Do you remember that? Right? I listen, I'm not saying you're wrong, Vince. I agree with you. I think you got a Fed here that is putting the kibosh on everything. You got midterm elections coming up. God knows what comes out of that, right? You got tariffs. You have a bear market under the hood in this market that we've been talking about I feel like for months now. How long on these webinars have we been talking about that bear market tornado while the market's sitting at new highs and it's destroying things? We've been talking about that since what, the summer? So I agree with you, Vince. I agree with you 100%. But if you're going to trade in this climate at all, then these are the spots you have to start getting ready to look at. You understand what I'm saying, Vince? You can't chase rallies. That you can't do. You can't buy, plus 1,000 points when everyone's bullish, because then you might see that black swan come into play. The logic here is that you may be right, Vince. There may be a black swan event, but the likelihood is it's not going to come with all these guys positioned for it. That's the logic when taking a contrarian approach off sentiment. Okay. Now, if you were to tell me there's going to be a monster squeeze, and then, this market might end up falling apart from there, I don't think you're nuts. Exactly. Listen, we all agree these markets, I'm not going to use the word rigged, but there's some fugazi stuff that goes on a day-to-day basis out there. Okay. They've been taking things down in a systematic, mechanical way under the hood, like I said, since the summer. Non-stop selling any housing, economic-related stuff, while the economy was booming, has been getting hit over the head. And nobody could figure out why. Now we're starting to see the fears, Vince. Now we're starting to see why underneath the hood, breath was so awful. They held the markets up. They did a great job of it, too. All right? You guys, how long? We've been talking about that. We said this market's at new highs. And if you look sector by sector at selective names, you look like you're in a full-fledged bear market. And yet the market was right at new highs. Incredible artwork. But now we're starting to see, some of the reasons why. The market usually does that. Sometimes they go overboard in doing it, but the market's always ahead of the game, always ahead of the game. But yeah, I hear you, Vince. I totally hear you. And that's what everybody on this sheet here, that's what they're worried about. Yeah, exactly. They were holding up the market with a small portion of stocks. The other 2/3 of the market has already been in a bear market. They've been mangled, mutilated. It's almost like a black swan event is already factored in to a good portion of this market. I guess that's the point I'm trying to get at. So for obvious reasons, that's what makes swing trading in this climate difficult, okay? And you guys remember, I was telling you back before the election, all right, Vince, on the note you just said, before the election, I just stopped swing trading. Like, I would swing trade once in a blue moon, take a small piece of a name with some time behind it, because flow was just so useless and there was no follow through in markets. Okay. But what happened was, after the election, the flow exploded. The last thing we thought was going to happen, right? Everyone drilled into our head, buy VIX, buy protection. If Trump gets elected, the game is over. That's what was drilled into our head. And then the total freaking opposite happened. And not only did the markets rally, the flow was as good as I ever seen in my career. We saw missile after missile, $1 million sweeps, one after the other, in names that would never catch that type of action. Dow names, infrastructure names, Deere, Caterpillar, railroad names, tech. You know what I mean? That started literally right before the election. Right before the election. You know, people forget the flow exploded post-election. Okay, that's where a lot of the big call buying came in and really took off. But before the election is where we started to see VXX, UVXY, put action, stuff like that. At the last place you would expect it. Right, steel names. Remember the steel names, Fonz? X, Nucor, STLD. And I'm being honest with you guys, prior to that, I gave up swing trading. I said, it's just not worth it. The markets are volatile. I'm day trading. I'm doing okay. I'm totally content with what I'm doing day trading. I don't even want to be bothered trying to swing trade. But that was mostly based off the flow, too. There was just nothing getting me excited out there. And then I started swing trading again because post-election, there were bombs going off. So, yeah, and I'm just saying, that's how you feel right now, right? And that's what Vince is saying. Like, you got to be out of your mind to swing trade right now. And you're both right. But what I'm trying to tell you guys is that it can come to an end at any point here. You know what I mean? Just because we feel like that now, that's everybody feels like that. That's the point I'm trying to make. Everybody feels like that. You see this indicator right here? This flight to liquidity indicator I told you guys earlier? That's a measure on just that. People want nothing to do with individual names right now. And if they have to be long, they're going to the most liquid ETFs because they're scared shitless. But just remember that, I'm bringing this to your attention. Throughout my career, okay, there have been a lot more times when we start to see these signals, and you're closer to the end than you are the beginning. I gave you one example in my career, one of where that wasn't the case. Where you took sentiment, at one point you would take sentiment, throw it out the window. Flow, there was put buying all over the damn place. They were buying Goldman Sachs $50 puts when the stock was 200. You know what I mean? It was all put action then. But that was one Armageddon scenario. If you want to know the one time where I've seen everyone get all bearish and not get run over. Okay. The more times that I saw were people getting blown up on the short side. Is that nuts? I've seen more people get blown up on the short side than I've seen them catch the Armageddon move. So even here's, I guess, the moral of the story here. As bearish as you feel right now, when we start to see the things change, and this sentiment's telling us that it's not that far away, when we start to see signs of the trend starting to change, meaning the buying starts to improve, maybe sellers start to get tired, right? Be ready and get those uneasy feelings and get them out of you. Because if you can't do that, you're going to have a tough time in what I think is this new environment we're going into, where you have to be able to buy the whooshes. You have to be able to buy the stomach, the pin in your stomach type price action to find success. It's not what we want. Yeah, MJ, you're saying you were buying whooshes. What whooshes? This just happened. What whooshes? Oh, intraday you're talking about? Yeah, well, we're talking about swing trading now, MJ. We're talking about swing trading. You know what I mean? Swing trading, what makes swing trading tough, I'm talking about. That's what you were saying. I thought you were meant with individual names. I think, MJ, it takes discipline, and you're going to need to be disciplined. But for intraday trading, you got to wait for things to line up. You can't just buy any red in a corrective phase intraday. That's not feasible. So you got to wait for things to line up. You know what I mean? And for me, you know what that is. Like, that's sweeper activity. But the problem is, MJ, there are going to be days where the flow is not going to be there and you're not going to have a play. Let me ask you a question, MJ. But that's the other thing. You don't like to play with stop losses, right? That's the other thing. That's why you're going to have a tough time. Yeah. That's why you're going to have a tough time. Because I think even what I mentioned to you guys earlier, I think is a feasible strategy in this type of market, where if you're in the room, you know what I'm talking about, but on a 5-minute chart, you're looking to play off Niners. If you want to add the addition of some flow or whatever price action or tape you're looking at, throw that into the mix. But you're looking for Niners. You're going to stop yourself out if you're not catching that move off nines. I think you're going to find success. I really do. But like you just mentioned, MJ, you have to stop yourself out. You got to have a downside stop. Whether it's like Brown, where you're buying 20-cent calls and 0 is the stop, then maybe try that, MJ. Maybe try that. But the bottom line is your risk reward's gotta be there. So in other words, that's what Brown's looking at. He buys, let's say, something for 20 cents. He thinks he could catch a Brown. Catch a Brown. He thinks he could catch a bounce. And if he doesn't, he lost the 20 cents. If he catches the bounce, you see him. Sometimes he gets lucky. They go to 80 cents. That made up 4 losers right there, if he's money managing properly, which I'm sure he is. Yeah, Havana, that's where it gets tricky too, because with options and stops in this type of market, it's not that, it's tough. It's tough. But the moral of the story is you got to have some sort of risk management, is what I'm trying to tell MJ, if you're trading on an intraday basis looking to buy weakness. You can't just buy every whoosh and hope that leads to a big rally. I know your problem with that, MJ. I know. But, at the same time, you got to understand what you have a shot to work. Like Brown just posted, the only way you're going to survive is by managing your risk somehow, some way. That's cardinal rule number 1. Yeah, and Vince, that's again part of the issue with trying to get in the middle of all the action. All right. That's why for me, if you ask me, Jesus, for option trading, what would you recommend as far as day trading? Okay. And what I would recommend is You only day trade when call sweepers have the ball. Why? Because you know what I always say, they provide momentum. Okay? If there's no call sweeper activity, if call sweepers aren't getting aggressive, the likelihood is they're not doing it for a reason. It's either chop or the market's going the other way and they want nothing to do with it. All right, so when you see this board light up green, that's telling you there's some juice out there. Okay, when you see the board, all of a sudden they're buying Home Depot puts, Roku puts, CRM puts, Caterpillar puts. From my experience, if you're going to say, well, I'm going to play along anyway, again, my opinion, I don't think net you're going to find much success out there. Yeah, what's up, High Heat? High Heat's saying at this point, is it just pay to play SPY? And High Heat, I can't argue with that. I don't blame you. I'm at that point. Because again, you see what's going on in individual names. Now, if we start to see that change, and I think flow, again, could be one of those indicators of that changing. In other words, we see some sweeper activity come in and they start buying things, maybe individual names will get their mojo back. But right now, there's no rhyme or reason out there. You have one FANG name going up, you have 3 going south for the day. Okay? You got the market rallying. You were right. You caught the squeeze. But the casino names are getting plastered again. You understand? And you don't want an individual names. That's too tough for us. It's not worth it. It's not worth it, especially the way you guys trade on the option end. It's tough. It's really, really tough. My pet peeve, here's my pet peeve in a market like this, okay? All this stuff I showed you guys, right? Let's say Monday we get selling, okay? Let's say Monday's a down day. And Monday after the close, I tell you guys, listen, we got everything on the sentiment side lined up here for a high probability squeeze. Everything is lined up, and we should be looking for a high probability squeeze. Okay. My pet peeve is you're ready, you buy something, you're positioned, you ignored all the negative noise out there, because I guarantee you there's a ton of it. The market squeezes and your stock doesn't move. How much do you want to kill somebody? How much do you want to take your keyboard or screen and throw it into the ocean? I tell you, for me, that's what frustrates me the most. The most is when I'm right, right, Maria? When my signals are right, and I botched it up like that. Oh man, I know, you shouldn't let stuff like bother you, but for me, that's one thing I cannot fight. Okay. And there are other things that don't bother me. Like, for example, if the market squeezes and sentiment is not there, right? Let's say this is all neutral and the market squeezes and I'm not a part of it, that doesn't bother me. Or let's say this is all bearish and the market squeezes and I didn't make any money. That doesn't bother me one bit. It doesn't bother me one bit because my signals weren't there. I don't care. Or again, Friday, let's say the market did squeeze from there. And I told you what the flow was telling me. I'll tell you one thing, if that market squeezed Friday, I wasn't going to make $1, not $1. Okay, but that doesn't bother me because the stuff that I have confidence in, wasn't lined up. It's when the stuff lines up and I still can't make money. I was right. And I still found a way to not make money, that's where I get really emotional. So what you're saying, high heat, you have a valid point there. And if you're experiencing the same thing, of course, you should, move towards something like an ETF, or something you have high confidence in. It used to be like even high beta names, like an Apple, let's say, you would squeeze with the market. And there's a good possibility of that, but, Apple, let's say, gets a downgrade in this freaking market. Let's say you bought Apple and it's downgraded. And all of a sudden, that one day of squeeze, the market rallies 500 points, and Apple is up 20 cents today. That's the risk you run in this market. So, yeah, until we start to see things improve, because here's the other thing, too. Like I'm telling you guys, the flow there's nothing impressive there. Okay? It's either one of two things. They're buying 2019 strikes in size, in names that pretty much go down every day, or it's little bits and pieces, right? We see Netflix sweeper 250 lots, and we see one, not 10. We see one. One. You know what I mean? So the flow is signaling to us, for our style, short-term traders, they're not getting aggressive in these things. That doesn't mean they can't go up and down, but they're not aggressive in them. And for me, that's a signal to be careful there, and has been. We've been talking about this, Maria, how long have we been talking about this, Maria? You and I have been talking about this since the summer, right? Since the summer. And we're starting to see the reasons why. We're starting to see the reasons why in the market. There's a reason why they weren't getting aggressive. There's a reason why there was a bear market tornado going from sector to sector. The market was trying to factor in something. The flow was staying away from something. So that's paying attention to the signals, but even I fall into that trap. You know what I mean? I fall into that trap where you try to find something, right? Oh, this looks good. It caught a little bit of flow. Let me take a shot. But yeah, so the long answer to your question, high heat, I don't blame you if you're looking for to stick with major ETFs for the time being until we see flow improve at the least. Yeah, Fonzie, IWM caught some action, but it's ETF activity. All right. So my point is, if I want to play IWM, I want to see names get hit with it. How do I know that IWM action, which is really active and is a major ETF known for hedging, how do I know that buying is legit? I don't, because I see one or two buyers in the IWM. I don't know these guys personally. Okay. Now, if I see IWM sweepers, okay, then I see an unusual TNA sweeper. Then I start to see individual names see action. Then you know what? I might say, I'm going to buy some IWM. Me, I usually buy TNA, but that's me. You know what I mean? Like, that's what I'm looking for. The one or two sweeps in IWM don't tell us a thing. They don't tell us a thing. That's the problem. Because we never know for sure what any of this action, the true intent, we never know. What we know is the more aggressive they get behind a group or a name, the better the odds of that being a legitimate aggressive bet, directional bet. So that's what we're trying to zone in on. Again, an example. Tuesday, I don't know if you guys remember, we saw them come out of the gate on Tuesday, right? Sweepers went nuts buying tech. All right. What did we see? We saw some QQQ call buyers, right? With individual names. Fonzie, that's the point I'm trying to make. So now we got QQQ action. We got tech names catching action. What was the cherry on top? Do any of you guys remember? TQQQ. Somebody comes in and sweeps up TQQQ. So now you got QQQ, big high beta tech names catching the action, and a TQQQ sweeper. It was pretty obvious they were playing a squeeze in tech. You know, it was pretty obvious. So, you know, those are the signs. Again, if you're looking for them, those are the signs that you want to keep an eye out for. If you can block out the rest of the noise, it's not as difficult as you may think. And I'm screaming about it. You know, I'm mentioning it. Early morning sweeper sets the tone and degenerate tech ETF TQQQ. Okay, that was in the morning on that squeeze, 1016. Right here. So you had that little gap up we were talking about, right? And we saw all that action. Again, not just TQQQ, QQQs, big tech names, all of them got lit up. And then that led to a monster squeeze that day. It may not have even squeezed that day as much, and we could have got some follow through, maybe the next day or so. But these markets move quick, especially now. It was all that day. You got a little gravy the next day, but then pretty much lost some mojo. So, but those are the signs, Fonzie. Those are the signs you want to look for, not just one bet. We're seeing a lot of one bets, and I'm telling you from a lot of experience with this stuff, it is extremely useless. Okay, if you see a Netflix sweep, right? We see and the reason why I post them is to get you ready. Okay, so in other words, let's say we see somebody sweep 250, a 250 lot of Netflix. Peanuts, means nothing. Okay, but now you're like, oh, you know what? I like that Netflix setup. Let's see, what is she doing? Oh, all right, some weakness. Your eyes are on Netflix off a 250 lot. You pull up the option chain, right? You see what, if you were going to make a play, what you're looking at. Then all of a sudden, you see I post another 250 lot. Okay. Then another 250 lot. Then another 250 lot. You understand? Your eyeballs were on it already. You know what move you're looking to make. And now, once the sweeper activity has convinced you that somebody's making a play on Netflix here, if you like it, you're ready to fire. All right? If I didn't post that first sweep in Netflix and I waited for the action to develop into something that's noteworthy, you're going to go through all that process from that point. Make sense? It'd be a lot easier for me to post the action once it developed, but you don't want that. You know, you want to be ready. You want to be ready, especially in these names. Like when they want to sweep a Facebook, they don't sweep it once, a 500 lot, and then you never see them again for the day. That's, excuse my French, bullshit. Nonsense. When they sweep a Facebook, boom, 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 boom. Right? When they sweep an AMD, they don't hit it once. And by the way, AMD put sweepers Friday too. Come on. AMD put sweepers? Did that rally have any shot on Friday? That rally had no shot Friday. these are momentum names that they would be tattooing call side. Roku, a lot of us love to play that name on the call side, right? And they're buying puts into a squeeze. So, but that's the point I'm trying to make. The flow makes sense if you're listening. Not every order is actionable. And it's okay, like you're saying, Fonz, if you like IWM and you already did the work, now you know what to look for at a flow if you're looking for flow to confirm it. Now you're ready. If you're looking at IWM for a squeeze and you're hoping the flow confirms it, I just explained to you what you would need to see in order for the flow to confirm it. And it helps out with the timing a great deal. About damn time. Yeah, and AMD, you remember the action it was catching on the call side. I mean, this thing was invincible for a time being. Invincible. But the point I'm trying to make is that what I do is in the room, I have the luxury, I'm on audio video all day long. So we're yapping about this all day long. But even people who signed up for the room have a life, right? They can't be in the room like me, MJ, Brown, Steven, Ricky, us degenerates. So what I started doing for a while now is a lot of the important stuff I'm posting to private Twitter, all the sentiment stuff, all the flow updates, all that stuff, all the commentary like this. Also what I started doing is this with the Niners. Okay. So for example, again, we were talking about this, Friday afternoon, there was a 9 potentially where sellers might get exhausted. All right. And we were looking for call activity. So I posted it in the room into private Twitter that there was a 9, not a ton of action, but a small uptick in the put the call, a little bit of bull flow in IWM if anybody was looking at that 9 for an entry. Yeah, it's funny, MJ, that we get a lot of questions on the 9s, and in my opinion, especially in this market, it's one of the least important things out there right now, in my opinion. You know what I mean? That's like the added indicator here. For me, just to give you an example, for me, I will never even think about playing a 9 into put sweeper activity. Well, it wouldn't ever be into bullish sentiment. That's what we like about 9s. Usually they line up with sentiment. But I will never play a bullish signal on a 9 into put sweeper activity. Never, ever, ever. I would look for the flow to turn, right? So we're seeing put sweeper like we were seeing. Roku put sweeper, Caterpillar put sweeper, Home Depot put sweeper, UVXY call sweeper, all bearish. Okay? Let's say we get, this is AMD, all right? But let's say it was SPY. Let's say there's a green 9. You think I'm going to try to play that low? You're out of your mind. What I would be looking for is now some call sweeper activity for that flow to turn from put sweeper to call buying, and then I consider playing that 9. But if put sweepers have the ball, I'm not getting in the way of that. No way. No way. Because again, this is a sign of potential exhaustion. What put sweepers are telling me is they're not tired. The bears are still hungry. So I think it's a great addition, especially to like flow and sentiment if you're using that. If you're using technicals, it's a great addition to that. If you're focusing on the nines and ignoring sweeper activity, I think you're doing yourself a big disservice, especially in this environment. Especially. See, we were talking about recently on one of these webinars how in this environment, I think the flow sweeper activity is more useful than in a bullish trending environment. All right, when you're in a bullish trending environment like we've been in, right? A lot of stuff is bullish. Most of the tech sector, let's say FANG, all of FANG is in bull mode. So we saw Netflix sweeper into highs. Big deal. What does that tell us? Tells us nothing. You understand? So flow is not as useful when you're getting those all-out bull phases. When you have some volatility, when you have some ranges, I think that's where flow can help out in a big way. You know, when you get put action flip to call activity, you know, especially in a big way, those are nice turning points in volatile markets. When you're in a bullish trend, I remember, you guys know, MJ, in 2017, there would be weeks where we saw any put sweeper activity. The board would be green for a week. Yeah, so it's just a different way. Yeah, MJ made the best point. We forgot that the board was capable of lighting up red, like we've been seeing. Right? We used to see one put buyer stick out like a sore thumb. One aggressive put bet in a sea of green. So now I think the action's a little more telling, because even when it's sloppy and ugly, there's an edge out of flow. The edges don't do anything. That's the edge. Sit tight. There's no momentum out there. Relax yourself. Right? Board's lighting up with put sweepers. The momentum's to the downside. If you're looking to play the long side, relax. If you're looking to play the downside, put sweepers got the ball. You have the momentum. In 2017, there was none of that. Again, this is for short-term trading and stuff, but a lot of us fit into that camp. All right, so how did I do before we wrap it up? Did I cover my whole little itinerary schedule here? I think I did, right? Q&A. On the bottom, individual names currently suck. So basically, I figured we don't talk about individual names. I mean, what do you want to talk about? Anybody have any individual names that they want to share? That they see something special in? Here's my example of what frustrates me the most about individual names right here, okay? Even the good ones, even some of the good ones, okay? Remember we were talking about Caesars, how we said the buying there is absurd. They got something up their sleeve. There's something cooking in Caesars. They got something up their sleeve. They buy this thing every damn day, okay? Look what happened to the stock as they're buying it. Look at this. Couldn't find a bid. There was aggressive buying every day, and this thing just sold off and sold off and sold off and sold off. And then what happens? Catches news that somebody offered them $13 a share, willing to go higher. Okay, the best possible news you can get. And, depending where you bought it, you may even be down on it. And here's the kicker. $13 a share, legitimately, the stock hit 11 and change and stopped like a clock right there. Think about that for a second. All right, that is the epitome of the problem with individual names out there. Because even with a name like Caesars that was catching aggressive activity, super aggressive activity, and the flow was telling us something's cooking, we still couldn't make money. What are you going to do? It is what it is. You know, like Disney. You guys are talking about Disney. Disney looks incredible, right? Looks incredible. Do you have high confidence here you buy Disney that if this market doesn't get its rear end kicked, this thing is not going to come down with it? Would it shock you? I mean, look at this here. You know, and this is one name. This is one name. And there's a couple more, right? Starbucks, we're seeing some decent flow, pretty strong. But then you got names like the casinos, chemical names. Now, granted, you know, it's further out, some of the buying in this stuff. Look at this Axta. I'm in this. I'm in April's. Look at this. Look at this. SGMS. There's a $1 million leap sweep every single day in SGMS. Now, I get it, okay? It's not a week out. It's not a month out. There leaps. But give me the stock doesn't even squeeze. Look at this. It looks like the sellers got tired for now. This is not normal. Look at this. You know, there was another name, Penn. This name should be at new highs with what they've said and did. The CEO came out, every excuse he was given for why the stock is down, he had a legitimate rebuttal. Interest rates going higher. Well, all our debt is at a fixed rate. It doesn't affect us one bit. Oh, but tariffs are hurting the casinos. We have nothing tied to tariffs. Oh, well, so-and-so. No exposure to any of that stuff. But because it's in a group that was caught by a bearish tornado, right? Those bear market tornadoes, it just, look at it. This thing's got no shot unless they turn around. When they turn around. No shot. Has Wynn been up 2 days in a row in the last year? That stock's at new lows again, by the way. It's at new lows again. Home Depot. It looked like the best thing since sliced bread, Home Depot. Have you looked at it in the last week? Because if you haven't, a whole different story. Home Depot, quote unquote, is breaking out, we were hearing. Oh, yeah, she's breaking out all right. You know, so this is the problem. Like you guys showed me Disney, right? This is what Disney looked like. This is what Disney looks like Home Depot looked like, right here. What's to say this doesn't happen to Disney? You know, there's no rhyme or reason. That's what I'm telling you. You're trying to find a needle in the haystack right now. Until this stuff changes. Yeah, Walmart is strong, isn't it? I think. Yeah, Walmart's holding up. But again, Fonz, who's to say that this Walmart doesn't turn into a Lowe's when the bear market tornado shifts around into that group? It's tough. When you see this type of price action, it's tough. And that's why the comment you made earlier, who was it, Michael, Vince, or Fonz, that you got to get lucky on top of being right in individual names for a swing. You got to get lucky on top of being on the right side. That's the tough part. And when you see that, you don't really want to get in the middle of that, you know. And that's my point. Like if you want to, let's say Monday we have selling, and you want to catch a squeeze. If you want to feel confident about it, you're gonna have to play SPY. You know, you're going to have to play SPY. You can't say, oh, well, this thing is down. It should get this thing got hammered. It should see a squeeze. Or Home Depot strong, so it should follow through on the upside. You can't say that. The market didn't crash this week. The market actually was up for the week. Home Depot got crucified, right? The Chinese names. FXI was up on Friday. Okay, FXI was up on Friday. Every single Chinese name was bleeding to death. Come on. Do you guys realize what I'm saying here? FXI was up. So if you said that China was going to squeeze and you had a dream that the Chinese government was going to come in and inject liquidity into the economy, and they did that into weakness overnight. If you bought IQ, you got beat up. You got beat up. IQ looked like it was bottoming and setting up. Okay? And then you get an FXI squeeze up on the day, and IQ is down more than it was when FXI was getting crushed. That's not normal price action. If it happens once in a blue moon, yeah. But we're seeing this, guys. We're seeing this every day. I kid you not. Some of you weren't around in the summer. This has been going on all summer. This is the worst now, but this has been going on a long time. This didn't start. This didn't start now. Yeah, forget the trend moves. Even again, MJ, even if you're right, you got to get lucky. You know what I mean? Yeah, like you had those weed stocks, the story names, maybe you get lucky on. But if the sellers, if it's their turn, they're done. The software names, it was their turn. The bear market tornado, the weather shifted to software land. Right? Here's your Disney. Oh, yeah, this looks incredible. Whoop. And again, the problem is, guys, it's one thing if the market's going lower. This is going on. The market's up at times, and this is going on. Yeah, MJ, now, and that's a good sign, MJ, that they finally doing that, because this wasn't going to come to an end until they got the Squares of the world, the CRMs of the world. They had to get these things. They had to. So that's a great sign that they're finally AMD. You couldn't have AMD run through this niner and then feel good about a correction being closer to an end than the beginning. This had to happen. This had to happen. There's no hiding. Yeah, I see you guys talking about the gold miners. They look better, I'll tell you that much. Here's, again, Vince, with as crazy as this market is, let me paint you a scenario. Ready? Market down Monday, Tuesday. Gold miners up a little bit with gold. Okay? But because sentiment is so washed out, Wednesday you walk in, the market gapped up huge squeeze. S&P futures up 60. Where do you think gold may go? You understand? You can't see that scenario? I mean, again, here's my point. With everything going on, if you predicted everything that was going on in the world, the first thing that would have came to your head would be buy gold. No. If you did, you got annihilated. So I don't get me wrong, Vince. It looks better. It looks good, but it wouldn't shock me that if the market finds a bottom and squeezes, that this thing rolls over again. Would it shock any of you guys? Oh yeah, without a doubt. William probably made the best point I didn't even bring up today. He's like, September and October are usually disasters and volatile, and then there's, of course, without a doubt, William, without a doubt. You know, I sound like a broken record. I told you guys what I would do when I was managing client money. You think I would try to make money in this for clients? I'd be in all cash right now. And I would have been that way at the end of August, no matter what the market's doing, because I can't be nimble. So yeah, listen, the market's notoriously known for doing this and then finding a bottom and at least a decent squeeze towards the end of the year. Are we guaranteed for that? Absolutely not, but to say it's not a factor in this, I mean, is misleading. Of course it is. Of course it is. All these things stem up in September, October, all the time. You look back in any correction, it always is set up like this. Always. But we'll see what happens. Again, I don't like to get in the game of predicting. Like we were talking, if you remember, we were talking in August how just to be prepared, September, October could be a rocky 2-month period. We were at new highs, so you want to be careful there, right? You want to take some chips off the table, nice and easy. Did we know this was going to happen? No. It is weird how it happens, William. But seriously, that's why I just, when I was managing client money, because I couldn't be nimble. In other words, if I was fully invested, I couldn't just unravel it anytime I wanted to. So I used to, into strength or some stability, I used to just get my clients into predominantly cash, as much cash as possible, and sit tight. Even if the market went sideways, grinded higher, whatever it was, I was okay with it because it wasn't worth the risk. You have clients and you're fully invested here, and then this happens, you better hope this is the end of it, because another leg lower and you're done. Kaput. You're done. So we'll see. Again, we want to stay away from predicting. For me, again, I think the sentiment part and the sweeper activity is going to tell us the whole story. If we get the two to line up, you're going to have trouble convincing me otherwise, aside from a nice rally. Stephen, what are you saying now? I asked this before, so you already answered it. But what would you have to see to go into cash in your long-term daughter's account? Honestly, Stephen, probably nothing. You don't want to fool around there. Like if you're investing for your daughter, now that's investing. That's not trading, right? Trading and investing are two different things. What I've learned, if you're taking an investment approach, what you want to try to do, Stephen, is be able to add if things get worse. That's the trick. You understand? You don't want to try to time the market. What you want to do is you want to, whatever it is, even if it's the smallest amount, the market comes in a big way, buy something. If it's an ETF, a mutual fund, anything, park something there. It goes lower, do it again. You understand what I'm saying? And then over time, you're going to see how that pans out. Because you don't want to trade long-term accounts like that. We're not good enough, man. We're not good enough. I know, what's funny? My father-in-law, he's the kiss of death. You'll get a kick out of this. The kiss of death. He wrote out the whole Armageddon scenario, 2007, 2008. And you know where he cashed out his annuities now. Annuities. Not stocks, not even ETFs, annuities. He literally, in March, cashed out his account. So I think the account, it wasn't a ton of money. It went from, I think it was like 80 grand. I think it went down to 8 grand. And now, don't even ask where it would be now from 2008. So if you're investing for your kids or even yourself longer term, if you're young enough, you want to be able to add. That's where you want to add. You don't want to add up here. No matter how bullish it looks, you do not want to add into the highs. You want to wait for a correction. So even let's say we have another leg down. You buy something there. Okay, and relax. 3 months later, the end of the year, market's lower. Again, even if it's a little bit, find something to buy. Find something to buy. And then over the years, it's going to look like this. You know what I mean? So you're going to have a buy here. You're going to have something you bought 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 here. But net, whenever you're ready to look at that number and it means something, you're going to be in great shape. Make sense? That's what I've learned. Don't try to dime daughters' accounts and stuff like that. It's not worth it. All right, boys and girls. All right, so the moral of the whole story here is that as bearish as things may look right now, riffraff sentiment is telling us we're not too far away. The lows may be already in. How crazy is that? It's very possible. The lows could be in. A tradable low, this could already be the lows. Okay, we could get some weakness down to here, and all of a sudden, sentiment, everything, every single one of those, there's not too many left, is at extreme. And MJ bought puts, so she's saying it wouldn't be that shocking. She bought puts on Friday. But all kidding aside, at least a tradable squeeze, and it should be more than this one day. Even though it was a big day, it should be something at least for more than a week or two. And they say in a 2-day squeeze, it's possible. It would have to be a big one. It's possible. But the only reason I'm saying that is that it's not just the squeezometer. It's not these three. It's these guys. These are some big guys here. Again, AIM at the bottom there. When that gets into green mode, that has been at green mode every major market low that I've been a part of. It's close. It may even be there. So we're not talking about short-term indicators. We're talking about some real deal stuff getting close. That any further weakness early next week will be there. And they're usually at some major lows. MJ says no. So I feel really good about that scenario. All right, everybody. I appreciate you guys spending the Saturday with me. Enjoy your weekend. We'll see what we got cooking next week. Again, anybody who's new, go to wallstreetjesus.com. All right, strategy section. You'll find information there. And check out the product section. Lucci's got a tape reading course going on. Be good, everybody. I'll talk to you guys next week.